Hey everyone, my name's Andy. My channel's Finding Value. If you are interested in the most undervalued investment opportunities in the world, click subscribe. I cover a lot of these things. It's typically commodity related. And if that interests you, ride this commodity bull market up with me and everyone else in our community together. So today I was looking through the comment section. I'm going to answer some questions that you guys have. So one person made a comment about, might be smart to diversify into oil. That's up to you. I think oil is a pretty good play. Going on down, it says, Andy, in your opinion, what inning are oil and uranium in right now in the current commodity super cycle? I would say that they're both, they did like a pregame, but we haven't started the game yet. Oil may have just barely started. And what I mean by barely, it just barely turned up. So COVID kind of pushed all these things into a very low, drastically undervalued state. And if you look at the charts, if you never had COVID, I think we would be about where we are today. And if you look at the ratios, the ratio of oil is about 30 to 1, 30 barrels of 1 to 1 ounce of gold. That is typically where oil bottoms in the cycle. So about 30 to 1 is an extremely cheap oil to gold ratio. So I think that we are like right at the beginning of the anthem might be playing. And another thing of why I think we are super early in this commodity super cycle is the housing starts just went into an expansionary phase. And usually the commodity cycle starts right when we go into an expansionary phase. So everything of the data that I look at means that we are at the beginning of this bull market. And in terms of gold and silver usually go past an expansion phase. So the big move comes at the end. I think that we're not, some people have made comments that we're hopefully a 2011 type blow off move is coming. I don't think that's at the end. That's like 10 years away. And the reason I say like 8 or 10 years is because I don't think we can build housings, the real estate, the new housing starts. I don't think we can build as fast as what most people think. It's just not blowing through the roof here. They're being very cautious, they being the home builders. The home builders are being very cautious on just dumping a whole bunch of new homes on the market. And you've got also all these constraints to building new homes in terms of lumber prices and other supplies of many things. So I think we're like right at the beginning. I think we have a very long way to go. And the reason I started this channel is because we were at the beginning of this big commodity bull market. And I think real estate is the driver, which will be inflationary and push the dollar down. That is your gateway for inflation to get into the system. I also don't hear too many people talk about this. They usually talk about like inflation is this weird, mysterious thing that just happens to happen. I've always thought it needs to be loaned into existence through a fractional reserve banking system. That's how the money gets into the hands of the majority of people. And I always tied that to real estate. So going on down, just looking, you guys are, picking up some ounces. Good job there. You're killing it. It says, Andy, can you give us one buy for options? Something that you see and present us with the opportunity. What to buy, expiration strike. We need to short-term cash infusion. Well, so options they're very stressful. They're not like buying a stock. Buying a stock, you buy it and you can forget about it. And if you guys worry about a down day in a stock, like if you worry about your account being down, you're going to go absolutely crazy in options because they are super volatile. There's times, like let's say, I'm just going to give you an example, all right? If I were to put $1,000 into an option, I buy $1,000 worth of options on a company, and the company goes down like 5%. I might be down 20, 30, 40, 50% on that option. And you have to kind of know that these things are incredibly volatile. They can go up 2,000% in a day because they get bid down to some weird value that no one's willing to negotiate. So they get like priced as a penny. And when the price does go up, it gets repriced to 20, 30 cents or something like that. So it's very volatile. It's really hard for I think just normal people because of the volatility to stick it through. You can lose a lot of money if you don't know what you're doing, because you might get scared out and then you just try selling at whatever price. But typically what I do is I play a little bit longer option. So there's three ways an option is priced. You have the price of the stock, you have the volatility of the stock, and then you've got the time left on the contract on that option. Sorry, I said stock, but it's option. So price, volatility, and time. So what I try to do is you want to buy it when the thing kind of goes in that dead period that I always talk about. There's a dead period on the chart. You buy it, and then you hope that you buy it where you have the highest statistical probability of it playing out. That's all you can do. Then you try to time your buy where the option ends, where the end of the move you think is going to end. So the thing has to move higher. If it doesn't move higher, you lose money because the time decay on the option. So there's a couple of ways that you can play this. What I do is I either pick an option that's out there, or I pick an option that's like really short. Because if I think it's going to move and we get a 10%, 20%, 30% move, I want an option that's really short or like has very small time on it, because I pay hardly any of a premium on it. But your risk goes way up, because if you're wrong, you lose. I mean, you lose some money. So this is more about a numbers game and a statistical probability, and really managing your the size of your allocation to it. So it's about taking more bets, because there's such an asymmetric bet where you cycle more bets. And what one of the things I do is take a very short duration contract. I buy it, and then if it goes up 100, 200, 300% in a week, I close it, and then I convert that money back into stock. And then I just do that over and over and over. Sounds great if you're winning, but you're going to lose on some potentially. I've had a pretty good record. I've done pretty well on picking my options. I usually pick out of the money options. They're usually vastly cheaper. And if you're pretty good at time and stuff, you can make quite a bit of money. So like one option, I bought it. It went up over 100% in the first day I bought it. So I closed it. It was up like 80%. That's when the option that someone else was willing to buy it at. So I was up 80%, made a couple $1,000, transferred it in, waited for the stock to kind of move around. It became less volatile. The option went down, and I rebought it in with my original amount. So I did. That's one example. So sometimes I make a decision, and you kind of have to be quick on your feet sometimes and be like, well, I'm going to close this out. I've got the gain right now. I'll rebuy it back if it comes on back, or I'm going to choose something else if you see another opportunity. So I don't want to give you guys too many option recommendations, because there's a high likelihood that even though I can give you the right ticker symbol at the right time, that you have to also know when to sell. And sometimes you have to have a little bit of experience and say, hey, look, we're up 80, 90%. It's only been one day. I'm going to get out of this thing. And I can't really do that with the timing on this channel. So I don't want to like get you guys, it's too volatile and too hard to do it, in my opinion. So I'm very hesitant to give you guys options advice. That's just me. I'm not. So come on down. Buy call options, silver mines. Yeah, silver could be a good one very soon. You want to buy it when the price is kind of going down. You kind of have to take if you're going to do it, you want to try to time the bottom of that ABC correction and then buy into strength as it turns before it goes real big. It says, you mentioned times 23 the price of uranium in one of your videos. With such a price, how much gain do you expect on your uranium investments from today? So for uranium, so the 23 times price movement is against, that was uranium from its bottom all the way to the top, and I think that might be against maybe stocks. I can remember. Let me do a quick, because right now against gold is a 60, it'd be 60 divided by, let's say we get down to a 4. That's 15 times. So the 23 times maybe is the price move. Yeah, that's the price move, 15 times against gold. So wow, how much gain do we expect on the uranium investments from today? It depends on the companies, depends on what companies they are. A 5 to 1,000% increase, I think, is very doable. I think it could go way up more than that. It really depends on inflation. If we see a highly inflationary environment, energy is a good hedge against inflation, which I think we will get. I mean, there's a possibility that uranium investments could go up much larger from today's standpoint than 500%. And I don't want to get overly optimistic. I could give you valuations or numbers that you're like, there's no way. Now, if we have a uranium bull market, and I'm going to throw out a number, and people may be in disbelief. People always talk about the $50, $60 number. That's the minimum price for uranium to kick on. But we have a massive deficit way out there. And the dynamics and how this all plays out may be vastly different. Maybe we blow right up to like a $400 or $500 uranium price. I don't know. There's even potential of $1,000 uranium per pound. I know it's crazy, but that wouldn't be out of historical norm if gold gets to $5,000 or $10,000 an ounce. I mean, if you start doing a 1 to 5 ratio and gold goes to 5,000, that's $1,000 a pound. So this thing can go way higher than what we think. I wouldn't rule that out. And are people willing to pay that? Maybe. I don't have the answers here, because that number is going to make me sound like I'm I'm a loony guy. Because right now we're so far on the downside. What people lack is the vision to see forward. And I'm not saying that it's going to hit 1,000, but I'm saying it could go a lot higher than what you think. That's all. And if the price of uranium goes up, the price of uranium could go up 500 to 1,000%, 500 to 1,000%. So if the price of uranium, 5 times gets you to 150, 10 times gets you to 300. 300 is definitely in the ballpark for the price of uranium. Now, if the price of uranium goes up a 10x, I think some of these companies could go up 50 times from where we're at, 20 times, 30 times. I mean, you could get a 500 bagger or 1,000 bagger if you catch one of these small explorers, if they find something large, a big deposit, and the price is moving up 500 to 1,000%. I mean, you see a drastic move. So that's why I'm so heavily invested in uranium. And I'm not predicting this stuff. I don't want you guys to think that this is a prediction of mine. I'm just saying the possibility is there. That is why when you see these very large asymmetric bets, you can risk 100% of your money and get 100 times back. Now, what companies could go up 100 times? All those small uranium exploration companies, the really, really small ones. Something like a Pure Point Uranium, Baseload Energy, Standard Uranium, some of those small ones, Sky Harbor, those smaller ones that are under 50 million, if they find something big, it's a big if. It's a big if. And that's why I spread it amongst all those different companies. I buy all of them. I just put a little bit of money in them. One of them hits, you get 100 times your money. Let's say you got $1,000 in it. 100 times 1,000 is $100,000. That's worth investing in. So that's that. So another thing to think of, I don't think that silver is manipulated on a long-term basis. I think it is on short-term, but not long-term. We would see shortages of silver. We're just bouncing between demand and the cost curve. What I do think is that silver is going to run out of inventory, and then we will have a very large spike because demand for silver, industrial demand, and even investment demands creeping up too, is going to put us in a weird situation where we don't have physical silver. So that's one there. I think the paper price will go away, or it's going to have to follow. So 3,000 physical ounces, good job there. That's a nice stack. If the government does not want replacing the dollar with crypto gold, why does the mint sell hundreds of millions of coins to sell to the public? I don't really have much of an option there. Well, I'll end it there, guys. This is probably long enough. Hopefully, you guys, if you have any questions or comments, leave it in the comment section. I love reading your guys' comments. If you need help with anything, let me know. I'll do a video on it, and I'll try to get you the help that you need. And the last comment here is greed is good, Gordon Gecko. So thanks for listening. This is Finding Value.